More losses. If it was a 2-minute break, we lost 4 points in that space, and maybe a bit of the despondency has always been the inflation numbers. Food articles inflation once again higher. Not good news. But let's cut to Biocon, where Kiran Mazumdar is speaking about the numbers.
To begin with, we have delivered a good set of numbers this first half of this fiscal. We have clocked a group revenue of 978 crores, which is a growth of 17% on a year-on-year basis. We have an EBITDA growth of 11% at 282 crores and a PAT of 156 crores. We must bear in mind that on a like-for-like basis, there has been an improvement in PAT numbers, given the fact that last year's numbers were including Axicop. And this year, of course, Axicop is excluded from our numbers. So given that, I think we have done extremely well. We were hoping to register slightly higher PAT numbers, expecting slightly greater licensing income. But licensing recognition is a matter of timing, because this is really directly linked to development and other aspects of our programs that we have partnered with Pfizer and Mylan. And nevertheless, I think we have registered licensing income of about 51 crores this half. And given the fact that some of the development costs were pretty high, the licensing income recognition at the PAT level is down at 11 crores, as opposed to last year's numbers, where we had actually been able to recognize at a PAT level a licensing income of 44 crores. So if you take all that in context, you can see that our core businesses have delivered extremely well, very, very robustly at that. And there are two particular mentions that I'd like to make here. One is our branded formulations business that we call the healthcare division. This has seen a growth of 37%, and we've also registered a very strong growth of 20% in our research services business, which is shown as 180 crores. So I think overall we are in the right direction. We are in the right growth trajectory. We are very confident that although the economic outlook globally is fairly uncertain, our business remains very, very strong, and we are very confident that we will continue to deliver a good set of numbers next half of the year as well. Just some other bits of information that I'd like to share. We have done extremely well in our insulins business all across, whether it is our own branded formulations, Insugen and Basilog business, whether it is our insulin business in other parts of the emerging world, or whether it is our development programs that we are doing with Pfizer. Pfizer, as many of you know, have launched their insulin products in the Indian market, Univia and Glarvia, very recently. But a big milestone for us is really the launch of our much-awaited pen device for insulin delivery, which we have registered as InsuPen. And what makes this a very unique offering is the fact that we are the first company to offer a common device for both Basilog and Insugen delivery. Given the fact that Glargine and insulin are offered by different companies, the pens that most patients have to use are very different, coming from the different companies. In our case, they just need to familiarize themselves with one type of pen, because just the same pen can be used for both the products. What we are also making available to patients for patient convenience is the fact that these pens are being offered in 3 colors, so that patients can actually use different colors for different types of insulin. In addition, we are also offering free needles for the pens with every vial, every cartridge of Basalog and Insugen. So I think this is going to be a very unique and differentiated offering. We are also focusing very strongly on patient education in terms of using pens for insulin delivery. And here we have set up a very customized field force to address this.
All right, those are some details of Biocon's numbers. I think the important part, much of it was of course known to us yesterday when the numbers came in. The branded formulations growth was 37%. It was the licensing income that investors and analysts were looking for, and that clearly is a disappointment because the company had said that licensing income will pick up in the coming quarters. It's come in at 51 crore, Shaw said, but net realization into the net profit basket is only 11 crore compared to 44 crore a year ago. So clearly developmental expenses have mounted. It's less profitable, although it has brought its back to earnings and to the markets were up to market expectations. So the top line actually was above estimates. The operating margins were in line with estimates. Kiran Mazumdar is with us. Kiran, thanks much for joining us. We heard you speaking in detail in your statement about the performance of the various components of your revenue. Give us an idea of how you expect things to go in the second half of the year. Should we assume that you will be able to maintain this kind of a 20% revenue growth?
Well, as you know, Lata, we've done extremely well this first half. Our core businesses continue to perform very well for us. We've seen very, very good growth in two verticals. The research services vertical, which has delivered 180 crores of top line, and of course our branded formulations business, which has grown 37%. So I think, and the rest of our businesses, of course, have done extremely well. At a quarterly level, our top line has grown 23%, and at a half-year level, it's grown 17%. And I think this is good performance for us, and I'm very confident that the next half will be as good, if not slightly better. So we continue to remain very focused and confident on delivering at this kind of level going forward. As I mentioned earlier, we see the research services business really beginning to gain traction. We are seeing our core businesses also, beginning to really focus and deliver much greater value for us, because we are seeing very good steadying of prices across all our APIs businesses. Our insulins business is doing extremely well. Our partnered programs are on track. I guess one of the aspects which I just touched upon briefly was that perhaps licensing income could have been slightly higher this quarter. Unfortunately, a lot has to do with the regulatory process, so sometimes you're not able to get the timing right. Yeah. But having said that, I'm confident that we can start doing things in the next half.
You mentioned that you've made about 51 crores in licensing revenues, income, but into the bottom line you could take in only 11 crore because of high developmental costs. Do things get better? Can you give us some guidance as to how licensing income will progress from here on? Because you said it will increase in subsequent quarters. As well, whether the margins will start improving because the development costs have been assumed upfront.
Well, this is about, there are two aspects to licensing. One is, of course, licensing income recognition. And here is where I explained that at a gross level, of course, our licensing income improved from 44 crores to 51 crores this first half as compared to last fiscal. But at a net level, because of development costs, we were only able to recognize 11 crores at a PAT level, whereas last year we were able to recognize 44 crores. And that makes a big difference to margins as well. Going forward, certainly, we will continue at the, at this kind of operation, at this kind of level in terms of licensing recognition. But we also expect some other kind of licensing income to really sort of, help us get a much higher net licensing income recognized going forward. So yes, you're right. You will see this improving. It's about timing. There have been regulatory delays, as you know, in our country, but I think most of these approvals have now come, and we hope that we will be able to take some corrective action in the next half.
Kiran, hi. You spoke about Insupen. Could you tell us whether there has been any kind of contribution of that in this quarter? Because your branded formulations have grown by about 37% on a year-on-year basis. And going forward, what might be the contribution of Insupen?
You're absolutely right. Actually, Insupen was just launched on the 17th of October, so just a few days ago. So it cannot obviously be captured in the first half results. But this is a long-awaited device that is expected to be a big value driver for us in the insulin segment, and certainly we will hope to capture quite a big upside from this launch in the next half. So yes, we remain very, very confident about our insulin foray in India as branded formulations. This is a very unique offering, as I mentioned, because we are one company that's able to offer a common device for all our insulins, Basalog and Insugen, which really maximizes patient convenience. So I think it is going to make a big difference. It's a very good pen. In fact, the doctors have actually welcomed the pen design. They've actually talked about the fact that it is a very, very good quality and up to their expectations. So I think we will do extremely well with this pen.
So can you give us some, sorry, just to continue what Rima was asking, some more tangible idea as to what therefore can be the branded formulations as well as the product business revenue increase? Because you now have this pen, you also have Pfizer's launches in this space. Can you give us whether this 37% improves much more? Also, some timeline on the oral insulin, I would assume that's much awaited.
Well, to answer your first question, Lata, this branded formulations healthcare business is something that we have focused on, and we expect to maintain this kind of 35 to 40% level of growth, and we want to make this into a 500 crore business within the next 2 fiscals. So it's quite an aggressive strategy, but I know we can get there on target. In terms of our oral insulin program, we continue to be in discussion with potential global partners. So at this point in time, there's not much I can share with you in terms of finalizing anything.
What has been the contribution of fidaxomicin? Because last quarter you spoke about ramping that up.
Well, we've had some of that business recognized this last quarter, and I think going forward, as I mentioned, I think it's good news that they have actually revised their forecast upwards, and there's quite an increasing demand, and we're trying to ready ourselves to actually cater and meet those demands. They're very, very optimistic, and I think they've already seen some very good offtake of their product in the market. So they've actually alerted us that we might have to, ramp up our production immediately and not wait for a year to do that, because they fear that their initial forecast was quite conservative. So I think we are readying ourselves for that.
Okay, well, just a couple of numbers more, Kiran. Syngene grew at 21%, right? YOY with a profit of 10 crore. Do you see it, growing even faster in the second half? Because I think they were in the past able to perform even better. And finally, what about the listing? What are the plans?
Yeah. Actually, I just want to correct you. The research services business grew 20%, and we actually delivered a PAT of 24 crores. So that was a pretty big contribution. If you remember last year, this time, we had a flat break-even position. So this has been a huge upswing for the research services business. I think you will see some equally good numbers in the second half, and we remain very committed as a result of this trend to our listing. And I think, we will see this, we expect this business to really be a very strong growth driver of the group.
All right, Kiran, we'll leave it at that. Thank you very much for joining us with all those details.